Welcome back. You're watching Market Fatafat right here on ET Now show where we get you all the stocks buzzing based on news flow and technicals. And talking about technicals, now we have Kunal Rambia joining us on the show. Very good afternoon to you, Kunal. Thank you so much for joining us on Market Fatafat. And let me straight come to you with the first stock that you've been tracking for us, and that's Bombay Dyeing. And how is this one looking on the charts to you? Do you see some more scope of an upside for Bombay Dyeing?
Very good afternoon. Yes, so this is a counter which we are discussing again. I think since 3 weeks now, this counter bottomed out near to 53 mark, and right now it's trading near to 83, 84. We had recommended the buy at around 68, 69 and with the target of 85. So yes, that remains intact. And look at the today's behavior, it's trading right near to the high of the day. So now realizing the target upside, I think this counter has a potential to reach till 95. So hold on. If not a new position, one can create new positions. Stop loss being 75. So now the target can be 95.
Okay, let's move on from Bombay Dyeing to Eicher Motors. Now this stock is in focus today on the back of a brokerage note we have, and this one is from Kotak. They're actually maintaining a sell on Eicher Motors. They've given a target price of 2,800 rupees per share. Now they believe that the domestic demand recovery for Royal Enfield portfolio remains quite uninspiring. It's not been anything exciting that they've seen over a period of September to March 2023. Other than that, overall the demand trends in key states for the company also are seeing a bit of a weakness as of now as well. And in terms of the states that they have mentioned coming in as well, they've said Kerala is one of them where they are seeing not anything exciting in terms of the demand trends that they are seeing. Kerala, Delhi, Punjab in September to March 2023, those demand trends still are below the levels of FY 2018 levels. Other than that, there's increasing competition that is coming in place as well, from Bajaj's Triumph to Hero's Harley in other more than 250cc motorcycle segment over the coming year. So that competitive intensity is expected to increase, which may weigh on the growth prospect of the company. And that is why Kotak is maintaining a sell and are given a target price of 2,800 rupees per share. So yes, keep an eye on this one. Stock not doing much in trade today. Trading with gains of almost 0.2%.
All right, let's shift focus. Let's talk about Ultratech Cement, and why is this one in focus? Is this is on back of Morgan Stanley report. The stock at one point in time was trading high about approximately 2.5%, taking the stock to a 3-month high level. Right now, it's trading high about 1%. Morgan Stanley has maintained an overweight stance on Ultratech with the price target of 8,500 rupees per share, which was actually indicating an upside of about 11% to the close or the Thursday close. They're saying that Ultratech share price will rise relative to Nifty 50 over the next 30 days. They're saying that the cement makers' queue for volumes are likely to be strong. Morgan Stanley is also saying that Ultratech, they are expecting Ultratech to continue to rise in near term, aided by strong set of profitability matrix in March quarter, and they're also saying medium-term demand visibility is intact despite near-term uncertainties. So with Morgan Stanley reposing faith in Ultratech Cement, setting a target of 8,500 rupees per share, you can see the stock trading higher by about 1% in otherwise weak market.
Okay, let's move on and talk about Canara Bank on the charts. Kunal, how is this one looking like in terms of the move? Last 3-4 months, not that great of a move that we've seen coming in. What is the chart indicating now for Canara Bank? Should we expect a good run-up?
So if you look at the chart, yes, as you rightly said, it was in sideways consolidation since beginning of Feb, and so far it remained in sideways consolidation. But today's move is around 1.5%, and day before yesterday's move, I think around was 1.5% to 2%, making this counter now a perfect curve formation candidate with inverse head and shoulder biasness. So keeping that in mind, one can initiate a buy on this. The nearest stop loss on this counter can be 285, and the first target on this now can be 310, and we'll keep revising the same on the higher side.
All right, buy on dips coming in for Canara Bank, a target of about 310 at least for the near term. Well, Shesha, let's shift focus. Let's talk about Z Entertainment, and this particular counter was in focus on back of a block deal, isn't it?
Well, absolutely. It is in focus on the back of a block deal that took place this morning, and on the back of that, the stock is under pressure, 2.5% lower in trade as we speak. 5.6% equities changed hands in a block deal that took place today morning, and Oppenheimer is the likely seller in the block deal that took place. Remember, there were reports, source-based reports that suggested that Oppenheimer is intending to sell about 5.6% stake in the company, and that is precisely the quantum of block deal that has taken place today. So, on the back of this block deal that has taken place, the stock is in focus, 2.5% lower for Z Entertainment.
Let's move on and talk about 361 WAM, Harsh, and why is this one in focus? I believe there's a brokerage note.
You're absolutely right. In fact, Investec has initiated coverage on 361 WAM and given it a solid target price of 675 rupees a share. Very solid upside, as you can see. What they believe is that the growth drivers for the business are strong. They're expecting consistent compounding to happen from the business. They're also of the view that 361 WAM was one of the early movers on the advisory model, and that model has been doing quite well since it mitigates certain key risks for the investment advisory business, and that helps 361 WAM as well. What they are expecting in terms of numbers is they are expecting AUM growth of 20% from FY23 to FY26. They're expecting a revenue CAGR of 17% FY23 to FY26 and a PAT CAGR of 20% again from FY23 to FY26. So on the back of that, the stock is up as well, 1% higher in trade.
All right, moving on, let's talk about Kotak Mahindra Bank, Kunal, and how is this one looking on the charts to you? This one also last year did underperform, but this year seems to be a tad bit better for Kotak, isn't it?
So last week again we had discussed about this counter near 1745, 1750. There was a reason for the downward channel breakout. And now this counter is trading at around near to 1900 mark. But today I would suggest a profit booking on this counter that's near to 1900. By any chance, if this counter successfully crosses the day's high, that's around 1920, then I think further potential of 75 to 80 rupees still on the cards. Otherwise, I think this counter seems to be the perfect to book out the profits and even think contra if at all it cools off. So for time being, book the profit and watch out for the 1915 mark as a new breakout.
Okay, let's move on and talk about APL Apollo Tubes. Why is this one in focus? Again, we have a lot of brokerage notes that have come in this morning as well. And this one is from Aquarius as well on APL Apollo Tubes. They're initiating coverage with a long rating, target price of 1,413 rupees per share. Strong structural play is what they believe APL is for in the expanding market. Other than that, they believe the company is quite well placed in terms of capitalizing on the industry growth levers, as well as rapid shift towards the value-added products by the company will help keeping the profitability on the uptrend for APL Apollo Tubes. On the back of that, let's keep an eye out on APL Apollo Tubes. Not doing anything great in trade, down 0.3% as we speak.
All right, let's talk about IOB then, Kunal, an Indian Overseas Bank, good performer in today's trading session with like the rest of the PSU banking pack. But just like Canara Bank, do you think this one also is a buy on dips candidate right now?
Absolutely, as you rightly said, it's a buy on dip candidate. Reason being, it was in sideways consolidation and the resistance being 2350. Today it took out decisively that level. Right now it is reaching near to that 2350 kind of mark. If at all we get the opportunity to buy near 2350, stop loss would be 2250. I think this counter is again a bottoming out candidate. The targets on the upside can be to the extent of 27.5 to 28. But I think one should wait for the retracement near 2350.
Right, let's talk about Tech Mahindra then. Yes, we've spoken about Infosys. That one is declining on back of its earnings. It had a collateral damage on the rest of the IT pack. But Tech Mahindra doesn't have only one reason to decline in trade. It also has a Citi report on back of which the stock is seeing a heavy selling pressure. At one point in time, the stock was declining by about 7%, which marked the worst intraday decline for the company since May 4, 2020, among the top losers in the Nifty IT index as well, taking the stock to a near two-year low. That is, the IT index fell to a two-year low today. No doubt the stock is falling on back of uncertainty in the March quarter earnings, also uncertain outlook coming in from TCS as well as Infosys. Apart from that, Citi has downgraded Tech Mahindra to a sell rating from a neutral rating. They've cut the target price to 955 rupees per share from 1,100 rupees per share. They're saying they are downgrading it due to the risk to growth in the company's communication vertical. Citi is also saying they see near-term challenges due to the fall in the client spending and risk of the banking contagion. The operating deleverage may weigh on margins and the risk reward on Tech Mahindra looks unfavorable. That's the word coming in from Citi, and that is adding on to additional pressure on Tech Mahindra with a downgrade and a target cut coming in as well. So that's Tech Mahindra down 5% right now.
Okay, let's move on to stock number 31 for today. And on the charts, Kunal, talk to us about Nalco. How are you looking at the charts for this? When you look at it, it's been a bit of a flip-floppy move that you see coming in. 1 year negative return, then you started seeing a bit of a recovery. Again, in the last 1 month, a bit of a decline that has come in. How should we be seeing the charts now?
So again, this is the repetitive counter we discussed near to 77, 78 mark. The first target was 85. In fact, in today's session, you can see it's trading near to the high of the day. And on the intraday chart, it's making a perfect cup and handle formation. So if someone wants to add new more position on this, then yes, one can create the new position also. Stop loss now will be 79. I think this counter is now opening up the doors till 87 to 88. So yes, it's hold on to the previous position and creating the new position with the stop loss of 79.
All right, moving on. Let's talk about Ugro, Ashesha. Why is this one in focus?
Have come in with respect to their fundraising plans. Remember, QIP issue of the company had opened on the 11th of April, and the floor price for the same was fixed at 149.5 rupees per share, which was a discount of 7% to that day's closing price. Now the company has gone ahead and informed the exchanges that they've determined and approved the issue price at 152 rupees per share. So on the back of this update that has come in, the stock is in focus. The stock is gaining in trade today, 2% higher for the stock as we speak.
Okay, let's move on and talk about Zomato then. Harsh, why have you picked out this stock today?
Well, yes, Vinny, another initiation note by Motilal Oswal that's come through Zomato with a target price of 70 rupees a share, 30% plus upside, so quite bullish on this particular counter, Motilal Oswal. But let's first talk about what they're really alluding to when it comes to the upside. They're saying that the food tech industry is still in its early stages, so there's a long runway for growth. Zomato is currently in a duopoly with Swiggy, with 55% market share over Swiggy, and they also believe that that will mean a little bit of headwind with regard to, or will delay the scale of gains with regard to capturing the market, but at the same time there's a longer runway is what they're alluding to. They also believe that the strong delivery across verticals is expected to drive revenue growth going forward. The expectation is that Zomato will break even in FY25. Zomato Gold is expected to aid growth as well. We have seen a bit of a change even in terms of the pricing of Zomato Gold, and that will add a little bit of more bullishness to the counter. And they also believe that quick commerce market is yet to settle. So on the back of all of that, we have Zomato, which is in focus today.
All right, so that is why Zomato is in focus in today's trading session. But Kunal, Maruti Suzuki, where do you see this one headed from here on? We've seen actually the auto pack be pretty sideways of late.
So today's observation on this counter is look at the high and the open. That's around 88.50, and right now it's trading at 8700. So that's a massive 150 points down from the opening level itself. And the volumes are also pretty high in the first 15 minutes itself. So it's a very short-term trade. One can initiate a short on this counter. I think the stop loss can be 87.50 spot level. And the first target on this counter can be again 84. I think this counter may remain in sideways consolidation, and it can be a great trade for the short-term traders.
Great trade for the short-term traders. That's a word coming in from Maruti Suzuki from Kunal. Let's talk about delivery, and one more initiation note that we're seeing this morning, and that's from Investec, and this one is on delivery. But they're initiating a buy rating, target price of 415 rupees per share. They said obviously the compelling competitive strengths are there, as well as the business is heading towards a profitability. They expect delivery to turn a bit positive in FY24. Other than that, they're also highlighting that like the business model, industry structure, negligible customer acquisition cost is there, and market leadership is there for delivery as well. On the back of this, we've seen delivery was gaining in trade, but he has given up those gains as of now, trading with a bit of a negative bias, down 0.2% in trade.
All right, moving on, let's talk about ICICI Pru Life, Kunal. And do you think that among the life insurance players, this one will be a standout candidate?
Absolutely. The reason being extreme downtrend right from the beginning of September till now. There was a falling wedge formation, and the first breakout happened near 440. We had discussed, I think, this counter in the past also, and now it's right now at 450, giving a new breakout. So fresh breakout, considering that one can initiate a buy, the stop loss being 440, and the first target on this counter can be 490, and I think we'll keep revising the target upward.
Okay, moving on, let's talk about Camlin Fine Sciences, and this one is in focus in today's trading session. At one point in time, the stock was trading higher by about 14.2%, marking the biggest intraday gain coming in for the counter since October 14, 2022. Right now, as you can see on your screen, the stock is trading higher by about 7.6%. It also had hit a highest level since January 13 and on track to snap a two-day losing streak as well. The company said that it has received an open offer bid of about 160 rupees per share from Infinity Direct Holdings and Infinity Direct Holdings Sidecar 1, along with persons acting in consort. So on back of this particular development, you can see the stock price that's trading above their open offer price of around 160 rupees per share, and that's Camlin Fine for you.
Okay, let's move on and talk about sale on the charts. Kunal, what are they indicating right now? Is it the right time to enter this one?
So actually it was a pair trade, but I'm just looking at the Steel Authority of India's chart itself. It's a sideways consolidation. The whole metal pack is definitely not doing so great, but this counter is available to me at the extreme favorable risk reward ratio. So initiating a buy on this, the stop loss is just 81. That's 1.3 rupee away from the present level. I think this counter, if at all picks up along with the market, can show us the levels of 85.5 to 86, and then we'll keep revising the levels again. So for time being, stop loss of 81, initiating a buy on Steel Authority of India.
All right, Ashesha, Make Money Organics, why is this one in focus?
Was in focus after the company informed the exchanges that a fire broke out at the company's finished goods warehouse in Bharuch, Gujarat. The fire incident took place yesterday in the afternoon, and they said that there were no casualties or injuries in the incident. As far as insurance is concerned, the company says that they have required insurance coverage to safeguard the loss and damage. However, this particular insurance coverage is under assessment at the moment. There is no impact on production as the fire occurred in the finished goods manufacturing plant, and hence there is no impact on the production plant as well. But on the back of this news that has come in, the stock is under pressure, 2.5% lower in trade for Make Money Organics.
Okay, let's move on and talk about PVR, Harsh. Why is this one in focus today? What is the reason behind this move?
Well, yes, Vinny. So we have PVR, which has opened 3 new multiplexes in Guwahati, and that's, of course, the largest metropolis in the northeastern India region. And what PVR is suggesting is that this gives them a little bit of more bandwidth in that particular space. Of course, this Guwahati is Assam, and it's a foothold in Assam, bringing the total number of cinemas as 4 and a total number of 14 screens now that they have in Guwahati and Jorat combined, which is Assam. And with this opening, PVR has consolidated its presence in East India as well. And on the back of that, stock though absolutely flat as we speak, but the announcement is a positive.
Okay, announcement is a positive. We will be keeping an eye out on PVR. Let's move on and talk about Max Healthcare. This one is in focus as DAM Capital has initiated coverage on this one with a target price of 550 rupees per share. They believe that Max has actually one of the standout performers within the hospital listed players over there, and this has been over the last couple of years that they've seen that Max is actually emerging as the second largest hospital chain and class leading service metrics as well. Other than that, since the merger with Radiant, they believe Max has actually witnessed a complete transformation in governance ethos, with operational excellence being placed at the center of the organization. The revamped management team has led a rapid scale up for Max, up in Max as well, and operating metrics as well. And the unlevered balance sheet, along with the combined seller execution track record and brand recall, could pave a way for the ROCE accretiveness and M&A, as well as adding significant optionality to the business as well. So that is why we're keeping an eye on Max Healthcare, not moving on the positive side today, down 0.5%. But yes, positive note coming in from that.
All right, let's talk about VA Tech Vabag, because this particular account at one point in time was trading higher, had hit a 4-month higher level as well. It had risen as much as 4.3%. Right now, it's actually scaled past this level for 5.8% is where the stock is trading at. The stock is rising because the company has sold a step-down subsidiary, Vabag Switzerland, for about 4.85 million Swiss franc. The subsidiary contributed about 1.23% of VA Tech Vabag's net worth during the last financial year. And on back of that, you can see the stock is trading higher by about 5.8% as we speak, scaling past the 4-month high level as well.
Okay, that's Viatech Wabag for you all. But with that, we are going to end this edition of Market Fatafat. Thank you so much, Kunal, Shesha, as well as Harsh and Samit for joining in with us.